Welcome, everyone. This is you could say, cryptocurrency podcast for Orthodox Christians by Orthodox Christians. I am, as many of you watching this might know, I'm David. Used to go by the name David the Real Medvite. I don't use that for YouTube anymore, but you can still refer to me as that. And with me today, I have two of my other friends here. I have Shil Murray, or also known as Anthony, and Dick Roll. They can introduce themselves as well. As a matter of fact, we can just start with the introduction since this is kind of the first chapter that we're doing here. Our plan is to kind of do this, keep this uh, a consistent thing so that we can help people who want to get into trading and to invest in assets that might become worth a lot more in the future so that we can be financially prosperous and independent. And this might be useful for day to day lives. So before I start talking about why I got into crypto, I would like to introduce which one of you want to introduce yourselves first?
I can go first.
Sure.
So I'm
Sure.
Anthony, known as Antonios, and formerly Subvexer. I kind of am schizo with all the usernames I use. But I've been a cryptocurrency trader for about 3 years. I got into crypto 2017, and I've been investing and buying the dips ever since.
Nice.
Uh,
Dick Rawl. Uh, yeah, I pretty much go by Dick Rawl everywhere. Uh, I deleted all my personal like social media accounts that could actually dox me, so just call me Dick Rawl or Dick. Yeah, I got into crypto probably at the end of October of last year. I'm not an expert by any means, but I have kind of autismed my way into it, and so yeah, so I've been doing pretty good, especially with the help from some of the more experienced guys like Antonio or Anthony, and yeah, we just like talking about crypto and learning, and hopefully the end, not hopefully the end goal is to not be a wage slave the rest of your life.
yep, exactly.
Yeah, yeah, exactly. I mean,
And
what's
and uh,
worse than
and
being a
Dick,
4 hour driver?
and Dick is kind of the resident harmonics expert. You guys will eventually learn what that even means, but he really picked up quick on the certain technique that we all subscribe to find low risk high reward opportunities on the chart. So we'll get into all that eventually as this podcast kind of moves along. But for now, we're just going to be covering kind of the basics for those who are new to this market, which is a pretty insane, highly volatile market to be thrown into if you're new to all of this stuff, investing and all that. Um, we're gonna help kind of introduce you to what it looks like investing and trading these markets. So we're gonna be touching a little bit on the philosophy and the theology and stuff like that, real briefly, and just kind of is even doing this stuff, can it be justified as a Christian, as an Orthodox Christian? Is there anything biblical that condemns it or anything like that? Because that's something that we see often. People ask or kind of even just interject their opinion, which isn't usually founded on anything. So maybe you can touch on that a little bit, David.
Yeah, before I do that, I can also talk about. I just want to give you a brief introduction to how I got into crypto. I'm a big noob. I I usually spend a lot of attention to things that interest me. So crypto was one of those interests. I think at the start of this year, um, and I pretty much tried to learn technical analysis and kind of the cryptosphere itself, what these currencies even do. I've been I've been interested in financial markets on and off. I will say 4 years, like since 4 years, I've been interested in financial markets on and off. So I'm very familiar with a lot of the theoretical aspect to it. But I've been investing and trading really at the start this year. in terms of some of the questions people have, it is ethical to trade or not. Well, I will first of all say that there's really nothing usurious about trading unless you specifically commit usury. There are possibilities you can do it only if you want to. But if you're someone who just wants to buy an asset and hold it and sell it at a higher price, that's basically what trading is. I mean, that's what it is. I mean, it's no different than buying a house, living in it, and 5 years later you sell at a higher price. That's an aspect of trading. You're just doing it on an exchange. That's what's different, and that's the thing with cryptocurrencies as well, is that when you're owning cryptocurrencies, you're owning something that's real. It's digital, it's intangible, but stock market is full of intangible goods too, and people still own them, and no one's asking questions about it. I heard some people wonder if you're kind of stealing money from someone if you buy something and sell at a higher price. That's not really. Um, then making profit will basically be that. That's kind of the idea. Then, are there people that lose money when they make a bad trade? Yes, but it's like, are there people that lose money when sold something that they shouldn't buy and they don't need to buy? Also, yes. So that's more on. It sounds kind of harsh. I don't want to say it's like their mistake, but it's just they made a wrong move, basically. And what we want to do is help you not make that. That's kind of what our kind of aim is, so that you don't end up buying into something that has no value and then just losing all your money, right? So that's
Yeah.
another thing.
Yeah, I mean the question really is risk Christian? And it's kind of a silly question when you think of it like that, because it's like, of course, I mean, we take risk every day with every decision we make. There we make a kind of a mini uh, like risk analysis, right? Like on almost everything that we do, even on a small scale, we're kind of analyzing, like, what could be the potential bad outcome of this thing that I'm deciding to do or not do, right?
Hmm.
And what's the possible benefit of it. So these are decisions that we make every day, regardless of all that. So that's really what the question is. And then it's, the step further is that okay to do with my money? Well, it's the same thing. It's a risk, right? So there's nothing explicitly that I know of in scripture or that's condemned by the church, which says to not make profit on what you have, on what on the things that you purchase. I mean, you can think of it the same way as a business, right? It's the same question as, is it Christian to own a business? Because what's your whole
Hmm.
goal with a business, right? It's to earn an income, and which means that you have to make profits on whatever it is that you're selling or service you're providing, and that requires a risk up front. There's no service or product that you can sell where you don't have to risk something up front at first, at least, right? So
Hmm.
this is the same thing. And what we do here is we try to uh, make smart, educated decisions with what we're investing in and where we're entering our positions, so that we can manage the risk, so that we're not uh, quote unquote gambling, and we
Hmm.
and we actually understand the risk that we're taking, and how and what the benefit could be, and then we have a whole plan. So we're gonna help you guys kind of develop what's called like trading rules, or I mean, this even
Hmm.
applies. Don't even think of it as trading, right? This applies on a longer term.
Investment.
Everything we talk about here, whether it's trading, short term swing trading, or long term investing, the same principles apply.
Hmm.
So we want to, make sure that we have an exit strategy. We have assessed the possible risks with buying any asset. And again, if you think of this in a broader scheme, not just cryptocurrency, of running and operating a business, there's always risk involved in that. So you don't just open a business on something that you're not even sure if the product is going to sell or the service is required or there's a demand for it. You do a whole analysis before you decide to, okay, I'm going to buy a big stock of this product, or I'm going to start working and applying all this time that I have to offering this service or whatever it is. And those are risk assessments. So that's what we're going to do here with cryptocurrency. There's a lot of money to be made and to be lost in these markets because they're highly volatile.
And on the topic of volatility, this is why kind of crypto is different from stock market. Is that stock market doesn't have this kind of volatility. Volatility is just the increase of risk. But one of the kind of other criticism I've heard about against Bitcoin is it's just too risky, right? It's too risky. It's not worth buying. There was a graph that I remember seeing on Twitter just yesterday or a couple of days ago at least, where it kind of showed. I'll post. I'll show it as well, where it shows the Bitcoin returns every year. So basically, what will happen if you bought Bitcoin at the start of the year and at the end of the year, and sold it at the end of the year. Sorry, and only 2 years will you be ending in a loss. All of the other years, you will be in very high profit. Usually, even 35%, which is the lowest amount of profit you could get, is a decent profit you could get
Yeah.
from the stock market. But in Bitcoin, it's like the lowest profit you will have gotten. These percentage gains are like 100%, 200%. It can be 1,000% sometimes, 300%, right? Just
Yeah.
last year. So it is risky, right? But in what sense? What does risk mean here? Risk means volatility. Risk means that it can appreciate 200% and then depreciate 80% the next month. That kind of risk.
Yeah.
But especially today, that risk, like that insane volatility, doesn't really exist as it was in the past. I will definitely agree that in the past it was incredibly volatile, but with the institutions as well, it's starting to become more and more stabilized.
Yeah.
And so
And you can see that on
the
this chart too. I mean, if you look at 2010 to 2013, the first three
Yeah.
years. Well, actually, I mean, even 2012 looked a little bit more stable. I don't know. This is kind of all over the place, this chart, but I mean, we haven't seen 1,000 plus percent increase in price since 2017. I think that we'll probably see something close to that this year.
hmm yeah.
Yeah, and kind of going back to what Tony was
Yeah.
saying. Uh, yeah. Um, what's the parable that Jesus said about the talents of gold?
Mm-hmm.
So how do you think you're getting? How do people think that those men were getting returns on it? They're putting it in a bank, the bank keep it, and the bank gives you money, letting them keep it. That's not necessarily how it works today, but that's how it worked back then. So that's obviously not usury.
Right. And in that
And then you
parable,
can take that.
yeah,
Yeah.
and in that parable, didn't Jesus condemn the man who didn't basically like capital? Not, I don't want to use the word capitalize, but you know what I mean. Like the guy who just kind of sat on his money and didn't have a
And he
return.
just buried it.
Yeah, he didn't have a return. He just stashed it away, and Jesus kind of condemned him, didn't he?
hmm Well, obviously, there's symbolic meaning to that as well. I mean, it's about making use of the gifts given to you by God.
Yeah.
But what's the thing about symbolism is that what it's when it's talking about something, giving that analogy, the analogy that it's giving is oftentimes, in some senses, is also real. There's a financial no, none of the church fathers, I think, barely any will consider the financial aspect of it, nor they will care about it. But there is some hint there as well, right? And the kind of idea is, which is just kind of normal human psychology, is that what's the point of not having more money if you're living in the world, right? So if you want to be a monk, um, obviously you're not going to think this way. You're not going to be thinking in terms of financial gain because you
Yeah.
are leaving the world. But for people that live in the world and want to gain financial independence, uh, which is not a bad thing, it's not evil to attain financial independence. It's actually something that's, I think, for Christians today, something that we should all strive towards. If you don't want to be slaves to the,
Yeah, if you don't want to be
uh,
a wagey your whole life,
yeah,
this is how you get out of it.
Right.
yeah, this is one of the ways you can get out of it, right? There's many different ways you can get out of this. Trading is just one of them, right? So
Yeah.
don't consider trading as this kind of, oh, trading will save my life. I'm gonna be so rich when I'm gonna, and I'm gonna be like, maybe it might not be for you. Okay, so it's something that's serious. It's not something that's basic. It's not something that you can just put $10,000 in and just like go crazy. And we're also not, I mean, channels do this all the time, but we're also not financial analysts. So if you make a bad trade, don't come and blame us and sue us, right? uh,
Yeah.
we're not financial analysis. It's not financial advice and all that kind of stuff.
Yeah,
Are there
take
any other
responsibility
things?
for your own actions. I mean, these are risky. We're dealing with risky assets here, and as soon as you jump into this market, you're in it. You're in the risk, and you've done that. You know, you're
Exactly.
the one that pulls the trigger and hits the buy button or sell button. No one else is doing that for you. So a big part of this is taking upon the responsibility of doing your research and making the right educated decisions, not based completely on emotion and FOMO as they call
Mhm.
it, right? So,
Fear of missing
Yeah.
out,
yep,
right? So I think
And
I think we kind of,
practice with smaller amounts,
yeah,
at
that's right.
first. And if you don't want to trade, um, even if you just want to long-term investing, that in this market, there's a good chance that you're going to be in the red on your investment. That happened to me, and yeah, it can be scary. And if you can't handle that the first time, um, just give you some advice. Don't sell when you think you should sell. Probably the best advice I can give you
Right.
when you're just a noob and you're just putting in money and you're telling you, and your first goal was to put in long term. When you see a 30, 40, 50, 60, even 70% correction, which we saw just a couple months ago, don't take your money out because it'll be,
Right. It's not a loss
you'll
until you
just lose
sell it.
everything and then you'll get wrecked. Yeah,
Yeah.
exactly.
yeah,
I mean, we're
yeah.
and I have the chart pulled or the Bitcoin returns image that you posted, David. And I mean, if you look, so if you look at this chart, right, 2017, this is when I got into crypto, earlier in the year. But if you entered and then it crashed. Well, I can just show you guys on the chart here if I pull up say the monthly, right? So you can see here. Now this was 2017. It looks so small now. It just looks like a little bump. But yeah, here it is, right? Here was this massive this giga bull market that it had this, it saw this 1,000% increase. I mean, look at the top. This is called the top wick. This candle wick here. It's just a big like kind of line going up. I mean, that's massive, right? So that that was a gigantic pump and dump basically. And if you bought towards the end of that year, 2017, you bought in this area right here, right? You bought at the top of that wick, and you got destroyed. I mean, you're sitting in, a 70. That's a 73% loss, I guess, from the top. I thought it was even more than that. And that,
So that's the end of the year. Yeah, that's the end of the
yeah,
year. Like if you sold at the end of the year, that
right,
will be your
okay,
loss.
yeah, yeah. So and that's when I got into it. I luckily bought in. I still was at a loss with a lot of the altcoins I bought. Uh, but it went up so high and then it crashed so much that like most people that bought in the second half of 2017 they got wrecked. Um, and then all of 2018 was a bear market for the whole year. It didn't start recovering until 2019. So, I mean, that's something to keep in mind here is that you could be investing. I mean, and that's what we're here to do is to like help you kind of be able to get a good gauge on when is a good time to find opportunity in the market. But if you bought in at that point when when it was giga bullish, and the prices already saw these 700-800% increases, and now you're interested and you're like, oh, it's easy money, right? I'm just gonna buy in, it'll be easy, everyone's becoming rich. And then you just bought in at the congrats, you just bought in at the top, and now your punishment is you have to hold your bags for a year plus, as every single day you wake up and you're seeing red in the markets, and you're wondering how much more wrecked you can get every day. So that that's something to keep in mind with when entering these markets, is like, this isn't something to play around with. And when everyone's thinking they're a financial genius because they're buying in at these insane price increases, that's not when you want to buy. You want to get in before all those people. You want to be the one that can sell them your profits, and then they're FOMOing in. So yeah, I mean that's how I entered this market in 2017. It was insanely bullish. It was all over the news. It made mainstream news and all that. And then to all of the next year was just insane. Like, it was just red every day. Like, you just woke up like a pink Wojak every day and just like blood coming out of your eyes.
Oh yeah, exactly. And like a lot of us, we all pretty much. I mean, the noobs. If you're a noob that joined 3 months ago, congratulations. You experienced a correction that is kind of like that.
Yeah,
'Cause
it
that
was
was a
50%
60%.
correction. Yeah.
That was an
Yeah, I was thinking it was
insane
even a
amount of
little more
correction
than
that a
that.
lot of people survived. So, if you survive through that, prosperity awaits, and um, especially as Anthony pointed out very rightly. I mean, when you can look at it from the history too. Is there's a consistent trend. There's a terminology of this. It's a kind of a rare term, but the term is called shrimp, and this refers to the kind of the new wallets that buy cryptocurrency. They kind of buy small amounts relative to other big holders, but they still buy a good amount of money. They're completely new. They didn't even exist. These wallets didn't even exist in the market. I mean, they existed, but not in the market. Um, until that time. Usually, those people, when a lot of them start buying, that's when you kind of know, okay, a lot of new
Yeah.
people are coming in.
Yeah.
That's not cool. That's not good.
And we've been talking about this a lot in the
Yeah, that's
Discord
fun.
about how you almost, as a complete pleb, a lot of this stuff, like when you see a chart, for example, if you don't even know what you're looking at when you see this chart, right? Um, don't be intimidated by that, because we talk about this all the time in the Discord, how you could almost, and I'm not recommending this, again, not financial advice or anything like that, but you could almost just read the macro sentiment in the market. I mean, not even macro, the micro sentiment in the market, just by following the news, listening to how people talk about it, seeing how suddenly all these normies are getting interested in this stuff. People you would never suspect talking about Bitcoin now, or even altcoins. That's the big one, right? If you see some normie and he's like, "Oh, I just invested in Link or something," you're like, There's no reason you should even know what that is, right? Things like that are those are signals that something abnormal is happening in the market, where
Yeah.
there's that's the phase where people are buying in, thinking that this is easy money. I'm gonna become rich by just investing in Dogecoin or something, because it just keeps going up. It'll never correct. That's where you could almost not look at the chart and just go by sentiment. I remember in 2017, towards the top of the market, or towards the top of the bull market, when the price was around 20K, that was the top, in 2017, and we didn't see that price again until last year. It didn't reach 20,000 for another. It didn't see that price for another 2 years. So when it topped out, the sentiment was like, I remember getting in an Uber, and my Uber driver, I wouldn't even bring it up. I wouldn't even bring up crypto. and the Uber driver would be like, "Oh, did you ever hear about this Bitcoin?" Like, and then I remember my cousins were buying Ripple and like all these altcoins, and like boomers are buying it, and it's like when that happens, that's where you want to really pay attention and start realizing that it's probably time to if you're not looking to exit, just get ready, just hold on to your butt, right? Because that could be where you start to see a downturn or shift of sentiment where all those plebs that just bought in at the highest price, they're gonna get dumped on.
Yeah, and that's something we can kind of look at on macro scale too. Is you know uh, when you see like the news pumping it, is it because they're working with these giant corporations to get people wrecked? Maybe, maybe not. There's probably a type of synergy there. But you start seeing it on your local news, you start seeing it on Fox News every day, Fox Business, all that stuff. You can be pretty certain that, like David was saying, the whales are getting ready to eat the shrimp.
Yep.
When you start seeing green candles that are like 5% every day, or even towards the end, if you look at 2017 or even 2013, 2014, you're seeing those mega giga bull green candles at the end. Maybe it's not a good idea to buy after you've had like 3 or 4 of those. So
Yeah, and a big part of this, and we're gonna be touching on this often. I think this will be a theme that we'll see a lot on this podcast. But I mean, a lot of this is psychological. It's really easy to say these things and talk about them and know them, and know these principles and say and teach them to other people. But to actually act upon this psychology is insanely difficult, and it takes many years and much experience to even identify that you might be under some kind of psychological delusion. Because that's what these markets do. That's what these whales do. The people who control these markets, it's all a psychological game for them. It's all. Have you guys ever got into game theory? I remember reading some books on that, and that really kind of, I'm not so sure how legitimate it is or anything like that, but I mean, I remember that really kind of changing how I view these markets. How it's all like, what we were saying earlier about holding on to, holding your bags during a big dump, right? When you're in the red, the game theory kicks in where it's like, now you're assessing, do I cut my losses here or do I keep holding and potentially take a bigger loss, or keep holding and wait till I'm back in profits. This is all, these
yeah,
are all different psychological things that you start to analyze.
yeah, and so me in a later episode, I was kind of looking back at my Kraken account when I first got into it, and there's like a 35-ish% correction in January 2021, and that was my first big correction. And I went back and looked at my Kraken account, and it looks like a schizo. Like, and so we could use that as an example one time. We don't have to,
It's called
but
over trading.
yeah, over trading, thinking that there's a line of resistance here because this YouTube guy said there's
Yeah.
resistance, and if it gets below this resistance, I'll sell it. And
Yep. That's another one.
and
Yeah.
if you're just yeah, and if you're just looking at some dude on YouTube, recognizing that we're some dudes on YouTube, but we're giving you a more macro picture, you're gonna get wrecked. I lost. If I didn't do that, if I would have just held on to what I had, I'd probably have 25% more in Bitcoin than I do right now. Um, Thankfully, I'm in a profit right now, but I could be even more in a profit.
Mm-hmm.
So that's another thing we can kind of go into that Anthony was talking about earlier,
Yeah.
was your mindset. If you come into crypto as a get rich quick, um, you're probably not looking at the flip side to where you're going to probably have to endure 50% corrections or more. You're going to paper hands your way into the poorhouse and think that, oh, this crypto game is just for noobs. it's just a scam. People are just taking your money.
And
Yeah,
what would
that's a classic.
and what would you guys say to one of the common like charges against one of the like I would actually just call it a cope because that's what it is. Why people don't bother getting looking into these markets is they'll say oh, a Bitcoin's just a like a Fed psyop or something, right? Like they have all these like copes of why they should not, why they should stay away from these markets because it's a psyop. It's that kind of boomer conspiracy theory that it's all psyop
It's
to
not
by the
real.
big banks or
Yeah.
whatever, right?
Yeah, I mean, if
Yeah.
it was
So,
psyop by the big bank, go ahead, David.
yeah, I was just going to say that if the charge is about market manipulation, then markets are manipulated everywhere.
Yep.
Uh, you're just silly if you think it's only Bitcoin. Market manipulation has existed ever since markets existed. What whales do, whales are people who hold a significant amount of that specific asset. So, Bitcoin whale will be someone that owns hundreds or thousands of Bitcoin, right? Those kinds of people. Uh, they've been, there's these psychological games. They are a part of that. That's market manipulation. So market manipulation isn't something like, let me just speak to the owner of Bitcoin, and so he can
Yeah.
lower the prices five. Like that's not market manipulation. Okay, that's impossible. It's
Yeah.
like, um, I mean, it
Yeah.
straight up is impossible with Bitcoin. It's possible with other assets. It's just
Yeah.
impossible with crypto in general. Usually, depends on which crypto project you're talking about. Some owners, they do stuff like that, but with Bitcoin, it's impossible. But market manipulation will look something again more like, kind of media cooperation. That FUD, that's an aspect of it. Fear, uncertainty, and doubt
Load
coming
the
from
FUD.
news. That or from social media. That's an aspect of market manipulation. Um, Veils deliberately selling or buying at specific levels to move the price so that they can have more profit. These are what Wyckoff calls accumulation and distribution. This happened a couple of months ago with Bitcoin. When Bitcoin was at 60K levels, there was Wyckoff distribution. And we might talk about what this is, but the basic idea of this distribution is that the veils were pretty much consistently selling at the top, which showed signs of weakness in Bitcoin. And they just let all of the noobs buy at the bottom so they could sell at higher prices. Eventually, they just left the market and they just watched at the silence. So, oh, yeah, all of these people got wrecked 60%. Cool. Now let's start buying again. That's market manipulation. Those are market manipulation examples. In terms of about what Bitcoin itself, Bitcoin has a long history, about what it is. It used to be about peer-to-peer transactions. Anthony knows much more about the kind of history of Bitcoin. There's different variants of it that have different prices, like Bitcoin Cash,
Yeah.
BSV,
Forks.
that kind of stuff. Yeah, these are what people call forks. I personally am not really interested in that kind of stuff. I just look at an asset and see, okay, what does this asset do and what does it show me on the charts and what does it mean for the rest of the market? For
Yeah.
me, that's usually what's important for me. I know some people like to get ideological about cryptocurrency. I get ideological about a lot of things. Anyone that watches videos from my channel or where I try to uh, refute people's arguments, anyone knows that I am very dogmatic about these. But with financial markets, I'm very flexible about that kind of stuff. So I don't
Yeah.
get into those kinds of debates personally. But um, in terms of Bitcoin or blockchain being kind of this Fed thing or World Economic Forum thing, obviously there's that aspect to that's going on. I think that's kind of undeniable. There's some cryptocurrency that are like mark of the Satan, mark of the beast here, like internet computer. That's something that you should never buy. I will not buy ICP ever. Like if you put a gun on my head, I will not be buying that. That's one of the worst projects I've ever seen. It's World Economic Forum tier. Um,
But that would be an
there
ideal.
are
That would
projects
be
like
where
that.
the ideological part comes in, where that's just your
Yeah,
personal conviction that you're like, I'm drawing a line here, Antichrist coins. You know, but it's not to say that it's not a, you know, I personally, I think, like, I'm ideologically against it too. But personally, I think, you know, it's not it doesn't necessarily mean it's going to perform badly. Because I think if you have these globalists and, you know, shilling these coins and investing in them, that's generally, you know, actually like a bullish sign for that coin, because it's like they're taking a long-term interest in it, and you have the most powerful money in the world backing it. But that's why we hate it, though. But that's where, like, an example of an ideological thing would come in, where it's like, if you know, if you bring that up in a discussion, we're gonna like roast you and make fun of it and stuff. But ultimately, that's like a personal conviction or whatever. You know, all this stuff. You know, that I personally see nothing wrong with, as a trader. You know, my name in here in the Discord is Ponzi Flipper. That's literally what we're doing with some of these smaller cap coins when we enter these like small positions and just kind of try to scalp the markets or whatever and make a few bucks. You know, there's a lot of those, right? There's a lot of these like kind of scammy projects. And you know, so there's a difference between, you know, not to get too much into that, but there is a difference between kind of like doing a swing trade on something that it's like, yeah, it's not something that you believe in ideologically, but you know, it might make you some money. And then there's the long-term projects that you believe in, that you see like there's a usefulness for them and you can get behind the project. My advice personally, as somebody who entered these markets in 2017, and I, you know, as David said, I got really involved in the whole the community split when Bitcoin forked, and there was a huge like schism, like a Bitcoin schism, and it got really vicious too. Like, it was very toxic. Still is, by the way. Probably not as much, but I mean, because most of those people separated from each other, but they're all blocked. You know, they've all at this point blocked each other on everything. So, but my point is that, you know, getting involved in these communities, and we see this a lot in the Discord too. People coming in and they're like shilling some project and they're saying it's a promising project, it's got a lot of potential and this and that. They're repeating these like tropes that are said in these in the communities when they join. You can almost tell because they're just reciting a script that all of the moderators in these communities behind these coins say, and they all say the same thing. It's going to the moon. You know, hold. It's all this propaganda basically that they're trying, these psychological tricks to keep everyone holding their bags and not selling, and getting their friends to buy in. I mean, there's a lot of that kind of like literal Ponzi tactics to it. So what I'm trying to say is, my advice would be, don't get too involved in these communities, because they're all the same. They all say the same thing, and some of the projects are legitimate and they do have long-term potential, as we said, and some are scams that will that'll get you wrecked. So my advice is, don't get emotionally tied to any of these assets. The less emotionally tied to these assets you are, the better off you will be, because it'll be much easier when it comes time to sell and let go to do that, because you won't be thinking like, oh, I'm turning my back on this project, and you know, I'm like a traitor or something. It's like a trait, Traitor, right? Traitor.
Trader.
You know, you might have that mentality when you get these like emotionally invested. You're like, oh, how can I tell the community that I sold it? It's like they're all gonna, you know, it's like all these games that they play, they're
gonna ostracise me.
Yeah,
No.
yeah. Or people will actually
When
make
you
fun
need
of
to
you.
sit
You know, oh, I sold. Oh, what are you doing? Like, why would you sell? Like, you never sell. Like, so, and we saw that with the Wall Street bet stuff too, right? They were all like diamond hands. Like, it became a meme.
Oh yeah,
Yeah.
people used to
Yeah.
talk about it all the time when I first got in. What was it about GameStop?
Yeah.
Stop
Like,
and
never sell. We saw what happened.
see.
What happens when you never sell.
Yeah. And there is something to be said for the hodl strategy with with Bitcoin, specifically with Bitcoin, because these other alts, most of them haven't been around long enough. They don't have enough price history to really say that like they've
Very,
been,
very few of them, I will
yeah,
say, don't have
they
that.
where they've
Yeah.
been through these drastic price increases and massive corrections and everything and stood the test of time. Most of them don't have enough price history to say that. But there is something to be said about this whole hodl strategy, right? But that doesn't discredit the notion that we need to be smart and educated and make good decisions about where we're entering our these our investments, right? Where we're deciding to buy. It's this isn't like a game of roulette or something. This isn't something you're like, oh, everything's up, I'm going to buy now. It seems safe, everything's going up. So we don't really make assessments in that way.
Yeah.
Um,
And that gets to the next topic I want to talk about on this. Dick, do you have something else to say? Or
Oh no, that's good. This
yeah,
topic's good.
I was going to talk about the idea of price predictions and looking at technical
Oh yeah, good
analysis,
one.
all that stuff as if it's just a crystal ball.
well, why don't we
Uh,
first talk about the difference between technicals and fundamentals? Because
sure,
that's an
sure.
important thing to know too, as like a new investor. Um,
Hmm.
because there's a big difference between the two.
Yeah, sure. You can talk about the fundamental analysis and technical
Yeah.
analysis and how they differ. It's
Well,
not too
just
complex.
yeah, it isn't. Real quick, it's basically fundamentals are news driven actions in the market. Um, oh, like we were just saying, like FUD, right? How these market manipulators will kind of put out like FUD news, which is fear, uncertainty, and doubt. FUD. So they'll maybe say like, oh, there was a mining or there was a hack on this exchange, and it's not safe anymore. So everyone's gonna pay, they're gonna create market panic by doing that, and they're just hoping that it creates this big dump, and they're gonna short everything. Um, so that would be an example, and then on the opposite side, it's like, oh, a big recent example was Tesla just invested whatever it was, 10 million or however much it was into Bitcoin, and it made national or world news even, and it's super bullish for Bitcoin. So it's like a big massive institutional investor entered a large position, right? So these are what we
Yeah.
call fundamentals, where it's like news driven things that could drive the markets, but they're essentially unpredictable.
Yeah.
And
And
then
also consider that the news, if you're hearing it in the news, it's what they want you to hear.
exactly, there's already the people who are taking advantage of that news happening. They've already done what they needed to do. You're the sucker that's getting pulled in to react how they want you to. Um,
Yeah. And so to take like a stock market equivalent, it's like, um, do you not think that these CEOs of these major companies, publicly traded companies, can just call CNN or Fox Business and say, "Hey, I have some big news. Let me go on your network." Do
Hmm. I will
you
also
not
add
think
that
that
fun.
they
Oh,
have like BlackRock and all these people? They can set this stuff up,
mhm.
so that when you're hearing it in the news and you react the way they want you to react, they're making money off of that.
yep.
I will also I will also add that a big aspect of fundamental analysis is about the intrinsic value of that asset that you're trading. So if I said, for example, X asset has very important implications on decentralized finance or oracles or whatever, right? Or peer to peer transactions, anything like that, that will be fundamental analysis. So fundamentals are important when you're kind of looking into it, but fundamentals, how do you know about fundamentals? Well, it's about kind of what the project itself shows to you. It's about uh, its practicality, its usability, and some of the projects, which some of them are in the top 10. I don't want to name it them in this episode. I don't want to like FUD people or anything like that, but some even in the top 10 have like no fundamentals, like at all.
Yeah.
They kind of just have hype, right? Which isn't a bad thing in itself. It just means they have a very good marketing team, but it can also mean something bad.
Right.
And the problem with fundamental analysis is you can kind of, I think, guess that if you just approach this fundamentally speaking, you can kind of understand, yeah, there's a very big degree of uncertainty unless you really, really do your own research and know the project and know this space.
Yeah.
But this requires a hefty amount of time to research, a lot of time, might even need a lot of money
Hmm.
to research into it, and you might still get tricked because there's a lot of
Yeah.
scammers in this space. That's one of the big
and
problems,
it, and it's and
especially.
it's
Yeah,
especially hard in crypto to make uh, financial decisions based on fundamentals because you have the biggest example of this is Dogecoin, right? And
Yeah.
now part of the I mentioned the news driven aspect to the fundamentals. Another part of it is the use cases and the technology of these networks or tokens or protocols or whatever they are that you're that we're talking about. Um, so you have news, use case, technology, all this stuff. How decentralized is it or isn't, all that kind of stuff. What we were mentioning
what
earlier about,
projects are they tied to, right?
right,
A
like what
lot
we
of
were mentioning earlier
assets
about
are tied to
World
each other.
Economic Forum coins, stuff like that. Um, those are fundamentals, and they're impossible to make decisions on, because that's where you get into pure speculation. And I mean, and like I was saying, an example of this is Dogecoin, right? Where you had that kind of drove the previous micro bull cycle. You had
Yeah, the
do,
euphoria.
yeah, this euphoria, and people. I remember there was remember when Elon was on Saturday Night Live and all the normies were saying, "Oh, I'm going to buy Doge before the show goes live because Elon
Oh
might
yeah.
say something about it, and there's going to be a massive spike in the price, right?" So they were all hoping for this pump that never happened.
Yeah, and then they
In
got mad at
fact,
him.
Yeah,
in
and
fact, it's dumped.
that's
So it
right,
was a it was
Yeah,
a
that's
classic.
right.
It was a classic buy the rumor, sell the news event.
exactly. And yeah, and it was completely baseless. It was just pure hopium that he might say something on SNL about Doge, and then that'll be it. He'll mention the doggy coin, and I'll become rich just from the one SNL episode. So, and this is literally something that happened. It was a massive, news driven thing. So this is what we are going to be avoiding here. We're not going to be
Hmm.
really, we don't encourage like buying based on this stuff. And I would say that the more healthy approach is like fundamentals plus technicals. And now technicals are
Exactly.
are what we're looking at here, the charts, right? Looking at the previous price history, the data that we have with the price history compared to what we have now, where the price is currently, and you look for different patterns, and you look at certain indicators and a combination and all this stuff that I won't get into the details of. We will cover a lot of these things in future episodes, but uh, we like to look at both. So we like to consider for longer term investments, something like I won't name any coins, but like um, no, I'm going to name a coin. We'll talk about Link, right? Like something like that, where there's undeniably a use case for it. It's already being used, and when you kind of learn about what problem it solves, I mean, it's the same with Bitcoin. When you learn about what problem it solves, you're like, there's no way that this isn't going to take off, and it already has a huge head start on any other competitor that might come along, right? And then obviously you factor in the technicals, right? Is it a pump and dump? Did it just see this massive price increase and then it dumped and it hasn't recovered? So you look at all these things and you kind of base your decision on that, not just one thing.
Hmm. And yeah, that's what's really important about technical analysis is exactly that. It's about data. It can tell you a lot about that coin. I mean, it can kind of be for example, in the example you gave with Chainlink, if you pair it with the US dollar, you can and try to look at it on a macro scale, on a weekly time frame, or maybe even on a daily time frame, you will notice that it's uptrending, right? So it's something that appreciates in value over a long period of time. So you can look at that as a technical as an investor, sorry, and say, this looks like something I might consider buying. Uh, and you this is an aspect of kind of investment strategies that you might want to use. That's just one of the many examples that I can come up with. Yeah.
Yeah.
And we're going to be mostly focusing on the technical analysis aspect, since that's kind of the easiest and most direct way to look
Yeah.
at what an asset is going to do in terms of price.
Hmm.
It's and I was gonna talk about this as well, that we don't do crystal ball stuff. We don't do price predictions. If you're here to expect price predictions at the end of the year, we're never doing that. We're never making price predictions.
That's
We're
right.
never making anything like that. We're not telling you where it's gonna go. We're gonna tell you what the indicators say, and whether the asset is bullish or bearish, whether you can make a trade setup, whether you can all of these things.
Yeah.
We
If
can
there's
we can talk
opportunity
about
there, if there isn't, that's
Yeah.
kind of what we look at overall, right? Is like,
if
is
there's
there a good
value, right?
opportunity? And to be clear, there is. We're gonna point out these distinctions to help anyone who's new to this, but um, we keep in mind we're a group of swing traders. We do both. So we're swing traders and we also hold long term positions. So
Yeah.
there is a distinction. We might be talking about something and it's more in reference to like a shorter term position. Swing trading is like generally what, like 7 to 10 day position, something like that. So maybe for about a week you're holding an asset and then you plan to sell or buy at a lower higher price. So we do both, right? So we have like our hold stack and then we have our trading stack. So we will be covering both, but like I said, it's kind of the same mentality regardless. I mean, you have the whole idea of Ponzi flipping, of like taking some shit coin and just it doesn't matter what it is. I see that in about a week, I would expect it to go up to this area here, and then my trade plan is I'm going to sell it there, and then I'll move on to the next thing. And then so there's that, and then there's I'm looking at the macro scale, and like 5 years from now, like I'm holding Ethereum and Bitcoin, and it's long term, it's on an uptrend, right? So there's different ways to approach this stuff, but it's all the same psychology and the same you want to make the same like risk assessments, just either on a smaller or larger scale. That's all it is. So
Yeah, that's a good point.
we're using the same strategies for entering if we're entering, say, a long position, which is you're buying at what you think is a lower price and you plan to sell when it's at a higher price. So we use the same strategies for that as we do for entering a longer term investment, which is like we'll do dollar cost averaging. We'll ladder in our position
Yes.
to manage the risk. And that means buying sporadically or selling whatever you're doing it
At
sporadically,
regular intervals. Yeah.
right, in intervals, so that it's a risk management strategy, so that you're not going all in at one price and then you could be immediately down and now you have no more cash to buy at a lower price. So this is something we do as swing traders and as long-term investors. We just have like, it's just a difference of scale that you're looking at.
Yeah, that's a good point. And also looking at, uh, you mentioned it earlier, but if you want to do the trading route, and I would suggest either doing it with no money, because there are some programs that you can do it with just practice, and you can just do it with just small amounts of money. But doing it, coming up with a plan, and even having a checklist before you enter any trade, and follow that plan regardless of what happens. And if you're entering a long and the long exceeds your plan by 100%, well, how many times is that going to happen compared to if you just held on to a little bit longer, you lost all your profits because it hit your target, you got greedy, and then it
Yeah.
came back down. And when we
Or
look at altcoins, when we look at some of these altcoin charts, like some of these technical analysis guy, one of the guys that we've learned from, he'll say straight up, straight down, straight up, straight down. And if you hold too long, you will see all of your gains go straight down the toilet.
yep. And if you don't have a target,
Yeah.
when and I have the Cardano chart pulled up here. So if you look at ADA, we're in what's called price discovery mode. So it's already surpassed the all-time high, and now it's in price discovery. So it's trying to the asset is trying to, or the market is trying to figure out what is the value of this asset at this level that it hasn't seen before, at these prices it's never seen before.
Yeah.
If you didn't have now, if you entered a position, below the all-time high it surpassed, and you didn't have a target in mind, now you're just holding this asset as it's pumping in space, right? And you don't know where, you don't have a plan. What a lot of traders do, inexperienced traders, is they'll just pick a round number, and they'll say, when it hits $3, I'm going to sell it. And it's not based on anything else except for the fact that it's a round number, as if no one else has plans to to sell at that point. So that's something I see often, and it's like it's kind of a meme to do that, right? And it's not based on anything other than you just picked a number that sounds good. So these are issues that we run into when we don't set these strict trade rules. And now I'm speaking both on macro and micro scales. I'm talking about both swing trades and for investments. You want to have, for longer term investments, you want to have a plan. You want to have an exit strategy. You want to have for where you're going to, start taking some money out, so taking some profits. And you want one for if the price goes too low. If it goes to this price, if it dumps down this low, I'm going to get out. It doesn't matter if I'm taking a loss. I'm going to cut it there. It doesn't matter.
Yeah.
Yeah, go
I
ahead.
wanna give an anecdote on this.
Yeah, go
I
ahead.
have a lot of friends who believe in a they a lot of them, we talked about this already in this talk, but a lot of them believe in the project Chainlink, right? They think it's great and all that. I remember when Chainlink was 30 USD and it started to pump really high. All of the Chainlink holding long-term investor friends I had, they were like, "Oh man, this is amazing. We're finally going to be prosperous." Chainlink 81K end of year kind of jokes and all that kind of stuff. And then because they had no exit strategy, they watched it go to $52, and then they watched it go to, I believe, $13. Right? Is that like the swing low of
Yeah.
Chainlink? $13.
Yeah, I think so, somewhere around there.
Yeah. So imagine that. Imagine seeing it go from $52 to
Yep,
$13.
13.4. Yeah,
Even the hodlers ended up
yeah,
realizing, oh wait, I
yeah.
lost
It
so
went up
much
to
money.
52. So imagine, a lot of people, they didn't get interested in Chainlink until around this top right here. They're like, oh, this is it. We're gonna make it, bros. And then, look at that massive. I mean, that's a 50. That it went from $50 to 15 in like a week. So
Yeah.
yeah.
I
And
mean,
this
it's
isn't
been,
a leg-
And
and
even
this is
like
a
V-shaped
legitimate
recovery.
project. This is not
Yeah.
a scam coin. This is a legitimate project. So
Yeah. And
now, to be
you know,
fair,
you
it did
could,
try a V-shaped recovery, like
yeah,
100% recovery, and then it dumped even harder.
yeah, exactly.
yeah. Uh,
Yep.
yeah. And, this is something where you can hold this one most likely for a long time. And if you didn't sell or whatever, you're going to make money on this. But what? Why would you want to buy it at 52 when you can buy it at
Yeah.
15? Now, are you going to buy it at the bottom every time? No. Okay, maybe you buy it at 20,
Right.
25. That's still a lot better than,
Yeah.
Yeah, exactly. I
that's
mean, yeah,
50%. That's 100% more if you buy it at 25 than you bought it at 50.
right. And it's gonna see 50 again. Like if you bought it, if you bought it at that level and you held this far, just you might as well keep holding. Like it's not topped out. Like you're gonna see eventually. I don't, we're not gonna make predictions on when it'll see that price, but there's no reason it shouldn't see those levels again. So that this is a case where it would be like, yeah, you'd be much better off if you bought it when everyone was panicking, than when everyone was thinking they were gonna
Euphoric.
make it. Yeah, the euphoric stage.
Hmm.
So, and like, yeah. So what I'm trying to say is like, yes, you wouldn't have lost anything if you're still holding, and it'll see that price again eventually. But why would you want to be in that position where you could have entered at a safer point, and you wouldn't be panicking as much. You wouldn't be like at a loss right now. You might be like starting to recover the lost gains that you had or something, right? So,
Yeah.
Exactly.
yeah.
There's nothing wrong with like buying when it's low. And there's a lot of Bitcoin had, for example, it had 8 weeks of opportunity, just golden opportunity for you to buy it at
Yes.
30K. 8 weeks. You
Yep.
could have bought it at 30K for 8 weeks. You did it. Now you're watching it at
Yep.
50K or those levels, and you're like, dang, I want to buy some Bitcoin after it
Yeah.
appreciated price like 60%. Well, this is exactly why technical analysis is important, so that you can
That's a good
kind
point.
of, yeah, so that you can invest at a way better price, right? That's
Yeah.
kind of the
Because you
thing.
had
This
all
is why
these.
those dumps are amazing if you have cash in hand. This is why you love those
Yes.
kinds of 60% uh price
And how do
reductions.
you have cash
Well,
in hand? You sell at good opportunities to sell. You sell at these, at the
yes.
euphoric stages when everyone's thinking they're a genius for buying.
Yeah. And then you had,
Exactly.
when it was down there chopping between 30 and 40,000, you had the FUD coming in saying, oh, Bitcoin's going back down to 20. Oh, Bitcoin's going back down to 15 or maybe even 10. And that's why a lot of these people were scared into not buying it then.
Yeah, people were shorting Bitcoin when it was 30K. Like there are
Yeah,
people that
even down,
basically the
even
opposite of
down at like
buying at the
28K.
top.
Yeah, it's exactly it.
Yeah.
There was a 50% correction, time to short. It's
Yeah.
it's the same. It's the inverse of the euphoric stage. It's like everyone is doom and gloom, and I'm gonna enter a short now. It's like, no, that's when the shorts are gonna, that's when you're looking to enter, and get a short squeeze or something like that. So, yeah, and then you can also tell the kind of what we talked about earlier with the sentiment, right? It's like when there is a massive correction like that, it is all doom and gloom. It's you have to
It's not fun
start.
to sit through.
It's not, but you have to start where you can really start making money is when you hear that kind of talk and you're thinking, good, it's time to look for a
Yes.
place to buy.
Yes.
Everyone's scared and they're leaving. Nothing about the tech has changed. Nothing about the utility or the economics or anything like that has changed. It's purely psychological reactions, and that's
Yeah.
where you take advantage of that. You look for opportunities, and it's the same both ways. You look for opportunities to dump on these noobs when they're thinking that they're geniuses for buying Ripple, and you dump your profits on them, and then you buy when they're scared and they're selling. This is how, and again, obviously easier said than done. It's one thing to know this, and then it's another to put into practice. But just knowing that is like a huge advantage over these people that are driving the prices to insane levels, right? Because that's all it is. It's just pure emotions. It's all emotion driven.
Yeah. And that's a good thing we can kind of goes both ways, shorting and longing.
Yeah,
Like this last correction, we need, it's easy to say, oh, just buy when everyone's scared, right? It's easy to say that. Not as easy to do it when you're there. We also don't want to uh, try and catch a falling knife, right? So
Exactly.
people that bought Bitcoin when it crashed from 65K down to 30K. Not many people probably bought it when it got down to 30K.
yeah,
People that did buy it when it got down to 30K that first time, I'll just say they got lucky.
yep,
But when you longer that period went, it was about what, 2.5 months. It was just chopping and it was
that's
trending
right.
down. And then all of a sudden, people were saying, hey, I see a falling wedge. Hey, I see a descending channel. Hey, this might be a Wyckoff accumulation, stuff like that. that's when it's time to buy.
Yes, exactly. When there's all these
You
patterns
don't want to
forming,
catch
yeah,
that. Yeah, you don't want to catch that. Try and catch that
yeah,
falling knife because it could have gone down to 20. It's not likely, but
It could have,
you
right?
wait for
It could have tested
opportunities to
previous
present
all-time
themselves.
high.
yep,
Yeah, you wait for opportunities to present themselves. You
yes,
wait for patterns. You wait for stuff like that. You don't just ape in and you think it's going to be good because you're a
yeah. It's just
genius.
gonna keep going. Yeah, like our thing is we're big on like identifying these patterns. So like Dick just mentioned the falling wedge, right? I'll just we're not gonna get too into this, but I'll demonstrate kind of like I'll give you a visual here. So now you had this is all this volatility, right? Like you had this big correction. It just dumped for days, right? It just was like nothing but just dumping, and that's catching a falling knife phase. That's not where you want to buy. You wait until things calm down, and there's an accumulation or a distribution, right? So now it's entering a new phase where the price is going sideways, whether it's at the top or the bottom of a cycle, and that's where these big whales and big institutional investors are plotting their next move, and they're accumulating or they're distributing or either one, and that's where we're looking for patterns, and what Dick just mentioned here. This is a falling wedge right here, right? There it is. Boom. So there's a falling wedge. So we see something like that, and then you look for some other combinations, and it's like that looks like there could be something, some opportunity there, right? And sure enough, what happened? Big breakout there, and then you're in the trade. So we look for these opportunities before these massive breakouts happen. We try to get in before it hits the euphoric stage, and not while everyone's buying. We try to find the low risk opportunities to get in, before anyone else does, while the price is maybe still gradually declining, but it's showing some signs that there is a possible reversal. That's the kind of opportunity we're looking for, and not after. We don't wait until
Yeah.
it's just pumped like 30%, and now, oh, it's safe now. We're looking to get in before that 30%, and this stuff requires patience. Um, you're almost always best off not buying when everyone's talking about that asset and how easy it is to make money off it. So you want to buy when it's quiet, right? Like we just had what I would call like a quiet period during those whole 2 or 3 months, whatever it was, where we were going sideways. I mean, even you could tell from the Discord, no one was chatting about
Yeah,
crypto anymore. There was no more interest.
exactly.
Yeah.
That's when you want to start looking to capitalize on that and start to find some opportunities and get in position when no one's talking about it anymore. No one's interested. It's not easy money anymore. We're not sure where,
Ooh,
this could go to zero. This could go to whatever. It's like that's, when there's all that doubt and uncertainty, that's where there's opportunity.
Yeah, and
yes.
there are many examples of like combinations playing out together. Like the example of the descending wedge, it might show seller exhaustion via bullish divergence on MACD or RSI or different oscillators. It can show you candlestick patterns, right? There's a lot of different things
Yeah.
that you can look at. I'm pretty sure we're going to be talking about,
Yeah,
if
we
we
will.
make it next we'll talk about like the divergences, candlestick patterns, what they mean, what they imply, that kind of stuff. You have all of these combinations coming together, right? They're not price predictions. Like tomorrow, maybe, I don't know, let's think of a very stupid, silly example. Maybe the UN is going to declare Bitcoin a terrorist organization, and people are going to start selling, right? It's not possible, but it's something like that. And like you can have all of these good combinations, and it still sells, right? That's a possibility. But that's the thing about technical analysis. It's a game of possibilities and probabilities. The probability of prosperity when you see all of these things coming together, or doom, right? If you it can be also be inverse, like right, like it was at 60K. The possibilities for doom was, I think, on hindsight,
Uh,
very evident when you look at the
yes.
60K, the buyer exhaustion, all that. Then you can kind of say, okay, the probability of this price going down or up has now changed significantly. I want to use an analogy. Maybe this is a silly, stupid, childish one, but anyone who has played any RPG or Japanese RPG or whatever, If you're gonna use a move, certain moves have accuracy tickers, right? Like X move has 80% accuracy to hit, but if it hits, you win the battle, right? That kind of stuff. It's kind of like that. You want high accuracy and you want um high power. That is high price movement for whatever you're looking for. And again, it's a game of probabilities and possibilities. It's not
Yeah.
a game of certainties. We never, that's why we don't make price predictions, because
Yeah.
predictions are certainties. You should never be certain in the market. Certainties will, it just doesn't exist here, right? Certainties obviously exist in the world, but it doesn't exist in the market. It's something that's it's a market principle that has existed ever since markets really ever existed, to be honest.
Yep.
Ever since analyzing markets existed, there's
And
so many different factors, even outside of Bitcoin, like inflation. Bitcoin has nothing to do with inflation, but it's a hedge against inflation. That's a thing that pushes Bitcoin price up. That's one of the many examples, for example. But Bitcoin, there's nothing Bitcoin can do about inflation or about certain macro events that might be more important than the charts that you're looking at. But when there's none of these kind of crazy events or news happening, like kind of like right now, then technical analysis is kind of you play the game of probabilities and
yeah.
possibilities.
Yep. Yeah, it's I mean this is all it's like another term for it is forecasting the market. We're just using the data that we have presented to us, and looking for those patterns and things that we can identify, that we have right now, and seeing if there is something there. Sometimes there isn't, and you just move on and find something else. So, yep. Is there maybe this is like a good time to wrap up? I don't know if you guys you
Yeah,
have any like closing thoughts that you want to share. I know this is like kind of
That's a good
yeah.
place to wrap up. Maybe for next time or for another podcast, but we'll talk about the debate on whether you should trade Bitcoin pairs or not. That just came
Yep.
to me.
Yep.
stuff like that. Yeah, I think we can talk about a lot of different kind of move on
Yeah.
to technical aspects of trading itself, I
And
think.
that ties into strategy. When you go into, when you enter this market, is your strategy to cash out into fiat and have, fiat ready to buy, maybe like some property or just something else to move it into another market? Or is your whole goal to stack Bitcoin? Do you want more and more Bitcoin, right? So that's where, yeah, we'll get into that, if that's something that you guys are interested, and please share any feedback that you have, topics that you'd like us to discuss, or any questions that you have. Maybe we'll in future episodes if we get some questions, we'll do like a kind of a little Q&A thing at the end if we can manage that.
That'd be
Hmm.
cool. Yeah, just leave your comments on if we missed something basic that you had a question on or want us to
Yeah.
talk about.
And even if it's like, we covered a little bit at the beginning, like the more, I guess, the theological stuff. I mean, there's not a whole ton to unpack with that. But, if you guys, any questions relating to like uh, financial markets and Christianity, again, I don't know if there's a whole lot there, but, we are, yeah,
There are some research papers I've seen research papers done on this topic. A lot of these things aren't really researched much. The economic aspect of the Christian Roman Empire, or like how monasteries function. I mean, this is not a defense of user or anything, but like an example I found when I was kind of reading some things, that I've found out that some monasteries, to kind of survive and make money, uh, had to gain interest.
mm-hmm,
Basically, that's one of the things that actually happened. Um, Whether that's something that was acceptable, or they just did something wrong, if we don't accept that, I'm fine with either aspect. It's just something that I remember reading about. So it's you know these
yeah, there's
things.
stuff there. Yeah, and then there's
Yeah,
obviously there's some church
Talk about a
fathers,
wide
mention
range of
things about
things.
it.
Yeah.
Yeah.
yeah, but the reason why there's not much theological things about like trading is that it's kind of just normal economic activity. I mean, this is
Yeah,
not something
exactly.
Yeah.
that's like this is not really something esoteric. Trading is not new. People have been trading assets
Yep.
since forever. And even technical analysis is actually not that new. It's new in the West, but I believe technical analysis came in Japan. I
Yeah.
think that's one of the first places where technical analysis came from. Uh,
Well, all
Current
Yeah, that was one of the
technical
first.
analysis is just a measure. So we didn't, we may not have always had this like visual representation of the the market fluctuations in a way where it's showing a visual of the data. But this market activity has been there. I mean, these fluctuations and all these various economic activity has been here since humans have been trading things.
yes.
So all that's different now is now we have the technology to be able to see the history on a chart like this. So that's all that's changed. And that's how you can get an idea of where things might go.
So technical analysis is basically something that was discovered. It's not
Right.
something invented. It's something that
Exactly.
That's
we are discovering it because of technology and stuff like that from centuries ago.
Yep.
macro patterns that reappear. Point. Good
Yep.
place to leave it.
Hmm. So
All
if
right.
that's, yeah, if that's, I think we covered a lot of things for this episode. I would like to thank all of you for listening to us talk, checking Anthony's chart. If you enjoyed, I hope you enjoyed that.
I didn't show
Uh,
too much, but yeah. Well,
we'll be showing a lot, I think, in the
yeah,
future,
we'll figure
and
something out with that.
we will see all of you in the next episode, maybe a stream. We'll see if we can work something out, and I'll see you all in the next video. Thanks for watching.
See you guys.